What's up, Kryptonites? Welcome back to Kryptonite, where I believe that cryptocurrency and the blockchain are the kryptonite of our modern financial system, and I love it, and I want some more of it. Gotta love the blockchain, guys. All right, as you know, and if you watched my last video, I was on a 3-trade losing streak. It was getting to me. But your boy is now on a 3-trade winning streak. Let's go. And I'm currently in a live trade right now. So we will go over all of those trades. But before I do go over my trades, we'll save that for a little later on in the video. We are going to check in on Mr. Bitcoin, the king of crypto, what I believe is still by far and away the best cryptocurrency ever created, mainly because it's this really the only one that cannot really be altered in any sort of meaningful way. It's too decentralized. It was made with a certain purpose in mind. That purpose is playing out as we speak. We know Ethereum is a big one, but Ethereum is able to change itself, right? It is now going from proof of work to proof of stake. It changed itself. Bitcoin will not change itself. It's too decentralized. I still like Ethereum, but I look at it more as like a company where I do believe, although it is more decentralized than your standard stock company, I still think there are people who can wield most of the control and can kind of force things through. So some might disagree with me on that. Again, I'm speaking in generalities. I'm just saying it's more decentralized than a company, but it's definitely less decentralized than Bitcoin. And another one I think is actually more decentralized is ADA. And I'm a big fan of ADA. I do think ADA at some point will be neck and neck with Ethereum because it has way lower gas fees. And I think that's just going to bring a lot more people in because at the end of the day, I don't want to pay and obviously the gas fees haven't been bad over the last few months because, the prices dropped so much. But at its peak when it was those I don't know, only the ultra rich were using Ethereum dApps. Now there is layer 2 scaling solutions like Arbitrum, Optimism, DYDX, right? So there is, layer 2s that do make it quite a bit cheaper. And that's pretty much the only way I think Ethereum has honestly survived because it's crazy expensive with those gas fees. So I do think ADA, they are building slow, but they're doing it the right way, and they are building out in a very decentralized fashion. So I am a big fan of ADA. Anyway, guys, enough of that. Let's jump right into the charts. As you can see on the weekly chart, we are floating around our weekly 200 moving average. We broke below it. We tried to break above it. We even closed a candle above it, but we immediately got rejected, almost in a little bit of a tweezer top, you could say, down. And now we are forming a potential double bottom here. Now, of course, our low here is at 17,737. We came up, got a nice bounce, and now we're back down. And I'm pretty sure, and a bunch of stuff's going to pop up here, but that's okay. Oh, I think I already made one. I already did one of these Fibonacci levels here. We're at the 236 currently. As you can see, we completed our tweezer bottom like I've been talking about, where the close of this candle is the exact opening of the next candle, and it remains the same with no pitter-patter between the two. Now, that is a hammer, but it's not a very strong hammer, I'd say. I wanted to see a longer wick on that hammer. This is a pattern that does occur at trend reversals, so obviously we have a whole other week before we see what happens here. Now, this could not mean anything. This could just mean it's just a candle and we break and continue to go down. So it needs confirmation. It needs some bullish follow through. Normally you would never trade off of this candle on its own. You would always look for it's either at a super strong support, which you could kind of maybe make the case right now. We're at the super strong support level. So, but for me personally, I would always wait for some follow through, candle close with that next one, and then we can talk about higher price targets. Let's jump down to the daily chart. As you can see, guys, I'm going to throw this back on here. Hopefully it's not too distracting. Mainly you can see we've been in this falling wedge pattern. We did have our bearish, basically bearish bear flag, right? Bear, yeah, pretty much a bear flag perfectly. Breakdown, and it has not hit its price target yet. So let's take a look at the potential price target of that move. And I don't believe we have hit that target yet. So there is still a chance that we will go all the way down to 16,762. That is the target price of that bearish flag. So we'll see if that plays out. Now, they don't always play out to their exact price targets. We did have another bearish flag that broke down right here, which has a little bit more of a modest price target. So if we do break this little consolidation that we have here, that's down at 17,281, so a little bit lower than our previous lows. And that would be a scenario, I could see a scenario in which we do break these previous lows and we do what's called a liquidity grab, where there's a lot of people with stop losses right here. We're going to come down. We're going to stop those people out. We're going to grab a bunch of liquidity. A bunch of people are going to jump into shorts because we broke this previous low. It's going to trap those traders. It's going to take liquidity from the now stopped out traders. And that's when we make our double bottom move to the upside. This is a very frequent occurrence in all markets, a liquidity grab. I talk about it a lot on this channel where I'm always looking for that. You're always looking for when's the next liquidity grab because you know it's coming. You know they're going to try to trick people. That is literally what they're doing. They're trying to trick you. It's just you have to know that people are actively trying to trick you and take your money. They're trying real hard. So we got to fight that. And that's something we always need to be aware of. Now, in the 12-hour, you can see that we have formed, and there's two ways to draw this. So it kind of depends on which trader you are. I'm actually going to delete this head and shoulders trade that I won earlier. It depends on the trader you are. So actually, I'm going to jump down to a little smaller time frame to kind of show you what I'm talking about here. So previously, I'm going to take this guy away for a second. Previously, we had things drawn like this, right? Maybe even you might have even had something like this too. But as you can see, as things have occurred, we've had to redraw this pattern. And this is why I mentioned on my last channel, I always like to put my trend lines at the farthest possible point. Because if I had put my trend line like this, then we get this nice green candle. I'm thinking, oh, we broke out. And I might go short. And then we come back and I get wrecked. I personally like to put my trend resistances at the very bottom of the wicks, the lowest it can possibly go, to where if it breaks that range, I know it's legitimate. I know that this is not just a fake out liquidity grab for those who had drawn their pattern like that. I want the farthest points. So, and actually this drawing it this way helped me win some trades right in here that I took. I was doing some scalping on the 1 minute, and you'll see those trades. I'll bring them up for you. It was because I had my trend line drawn at the lowest points. So I didn't get tricked by that dump there. I was thinking, nope, we're at support, and we got supported exactly there, and I was able to win a nice trade. Now again, this is how we had drawn it before, but we saw this fake out, again, tricking people into going long and then trapping them by sending it straight down. There was, like I talked about this on my channel when this was happening, and I said that the volume was too low. I didn't buy it. I even took multiple short positions that I just barely got stopped out of before it came down, and literally did exactly what I thought it was going to do because I thought it was a liquidity grab. I just didn't have my stop losses set quite high enough for how far this was going to push on the shorter time frames before wrecking everybody and dumping on them. And then we're back in the pattern. Yay. And we came down, and then I was looking at support there. But now that we've had this thing, I mean, you could technically continue to draw the pattern like this, or you could draw it like this. So the question is, are we in this pattern, or are we in this larger wedge pattern? This is where it gets tricky as a trader. Now, I did take a short position here. You'll see it kind of in there. And I am sort of betting on this being more of this pattern where we faked out, came back in, because again, we sort of came up again, faked people out again, and then dumped right back into the pattern. So I'm hoping to win a short position down. Maybe this makes sort of a W pattern, right? Maybe we don't come all the way down here, but maybe we get a W, and then it comes back up to retest this larger one, right? I wouldn't necessarily be calling a breakout off of, because we got multiple times we broke out of this guy and it didn't happen. So unless we get a ton of volume on another breakthrough of this trend line, then I'm thinking that I'm still waiting for this trend line. And once we break this trend line, now I'm interested. Now I'm thinking, okay, maybe it's time to go up and hit some higher price targets. But until then, again, I just shorted here, and you'll see why I shorted on the shorter time frames. But anyway, that is kind of what we're just waiting. We're in this waiting game. Bitcoin has literally putzed around between 19,500 and about 20,500. It's just putzed around for days and days, just lulling us to sleep. But eventually we will see a breakout. It's just a matter of time. So when that will happen, it kind of depends honestly on what pattern you think is the true one. If it's this wedge pattern here, then I mean we could be in this pattern for another, let's move this here for a second. September 10th. I mean, you could go all the way to, mid-September. Oh, the merge, the 15th, the Mt. Gox release, the 15th. Maybe we consolidate until the 15th. That's when we get our big Ethereum merge. We get the release of the Bitcoin from Mt. Gox, which, I think is it's not really a big deal. People are just making it out to be a bigger deal than it is. But some people could sell their Bitcoin on the market. So maybe that is when we will get our breakout around there, which would kind of make sense, honestly, with what's going on with events. But if you believe that this pattern is the true one, then about the 7th of September is when we should see a break to the upside or to the downside. And our target prices would be fairly conservative here. So we broke out right from there. About 20,650, which kind of just would be right where we already have been. So it could just continue to range at that point. It doesn't even necessarily have to make any big moves. Or we go down and let's see if it has any confluence with our previous targets. It does have confluence with the bear flag, I believe, right? Not our first bear. Our first bear flag is way low. Well, actually, I'm trying to remember now. Which bear flag was the one that we... Okay. Yeah, I think yeah, I remember now. So not really confluence necessarily with our bear flag. Confluence in terms of, if we continue to go lower because of the bear flag, then we continue to go lower because of the bear flag and the previous bear flag. So it's all kind of playing out in sort of confluence there. So that could be our next target. We're looking at 18,700, which would kind of put us right here at one of our previous lows. So there is a little bit of a range there. Let's actually draw that on the. So there's actually a nice little range right here. Get that little wick in there that we could come down to from this pattern target. So, but then again, there is also so there's the bear flag pattern target. There's the actual target of this specific wedge triangle. That could bring us a nice confluence here at 18,000. Yeah, and let's take it one step further, guys. Let's use something. I don't use this super often. I usually use it when I'm initially setting up some things. Oh, wow, look at that. Interesting. So we have a lot of volume traded right here. Ooh, wow. So if we come up here, that's going to be that's a strong point right there. Interesting. Let's try it out to the 12-hour here. Wow, yeah, a lot of. I'm going to move this to the right side because it always bugs me when it's on the left. It's always in the way of things. Go to, where are you? Go to the right. Sorry, to the left. Go to the left. Thank you. Yeah, a lot of volume traded right in here. Our point of control. Interesting. I thought there would be one. I thought there would be honestly one a little bit lower, but that is not a great sign, to be honest, because if we do break lower, we could see a pretty significant drop based on the fact that our point of control, this is super, it's super low. Yeah, it's all the way down. That's, yeah, I don't think it's not going that low, but anyway, so we don't have a lot of support from the VPVR as far as a strong support line. So we could see a big, a big drop, right? If we do break some of these lows here, it could be a quick tumble down to, and in my last video, I did talk about price targets being, for me, the lowest being 14,000, which is perfect confluence with this previous high here. And I think it even, if we even take, let's even do this. Let's take this a step further. Let's draw some Fibonacci's here, just for fun. Let's see what kind of price target. Let's see if we get my price target. Let's see if we got extra confluence. Ooh, that one is all the way at 8,000, that price target. That would be something. Okay, no confluence there, unfortunately. All we have pretty much is the support line there. That's pretty much it. So, but again, I'm not afraid, guys. I don't think it's going to go that low. I think it would be shocking to me. But again, I would look at it as an opportunity to buy and accumulate some more. All right, guys, you're probably wondering, Tim, I want to know about these trades. Tell me about these trades. Well, guys, I've been scalping my behind here on the 1 minute. Well, let me show my first trade. I didn't actually. No, I did scalp it on a lower time frame. All right, so here is, let's take a look at this. It was this one right here. All right, let's take a look. Oh. No, what the heck? I want my trade. Thank you. So this was a pretty basic pattern here. I spotted a head and shoulders on the, I think it was the time, it was 15-minute time frame. I thought it looked like a pretty clean one for the most part. So I'm going to be honest, I didn't do a whole lot of TA on this one. I just saw a pattern, and these tend to play out more on the shorter time frames, I've noticed. If I try to play them out in the long-term ones, they almost never work out for me, but it looked clean, nice, Yeah, it just looked like a clean head and shoulders. I already knew that we were kind of in a bearish mode. I can't remember exactly why. I just remember thinking, like, I think it's going to come down some more. And boom, we actually, boom, came down, hit my price target pretty nicely. Came back down to our support level here, trendline support, and I was able to win that trade. So that was my head and shoulders win. Not too exciting. These ones, though, were pretty freaking awesome. I'm going to show you right here. No, that is not. Oh, did I not? I want this one. Yeah, there we go. All right. I wish you could see that writing a little better. So I was trying out a new trading strategy on the 1 minute charts. Yes, sir. And I do like the 1 minute charts a lot. I like being in and out of trades very quickly. Eventually, as I get better as a trader, I might just become a scalper because I just love being in and out of trades. I hate sitting in trades for long periods of time. I hate it. I hate it. I like short trades. So what I was waiting for on the 1 minute time frame, I was waiting for a strong support level, which we had here, right? We had my nice black line of trend support. I was waiting for a hammer candle, which we got right there. You can't see it super well, but that was a nice hammer candle. Shout out to Tyler Brandt, loves those hammers. I got a big abnormal volume spike right there, multiple spikes, showing that bigger players with the big money are buying at these, or doing something at these levels, right? I assumed they were buying. They could have been shorting, but because of the candle, because of the strong support level, I assumed that big money was longing. So I made a bit of a range, right? I took this one candle and I made a range out of it, and I waited, and it pretty much immediately broke through the range. And so I jumped in it as soon as I could, which on the 1 minute it's tough because it happens fast. And I also used two other confluences. I used the RSI, which was totally oversold, and the stochastic, which was oversold. And then even on the longer time frames, which you can't see here, I did double check those, and we were kind of more in oversold territory on all the indicators. We weren't this oversold on the other ones, but we were in the territory. And so I kind of look at that as, okay, as long as we're in the territory and then these shorter ones are more of the extreme, then I know to jump into this one. So we jumped in, we rode that sucker up from a nice 2-to-1 win. Then we did the exact same strategy on the top here. We came up, broke above the 200, and we saw, again, a big abnormal volume spike. We were oversold on the RSI, both of them. I can't remember, I think like the 5 minute was also in the area. Some of the longer term ones, obviously they were more from this trade. They were more kind of, they hadn't caught up yet as much. But again, that was even a bigger volume spike than this one. Again, made a range out of that candle, waited for it to break the range. It did. I jumped in and rode that down for a 2-to-1. And look, it just barely, right? Look at that. I just barely won the trade, and then it shot back up. So lucked out big time on that one. So here's kind of what I wrote down. I said I was looking at multiple, the 1 minute, 5 minute, 15. I was looking at all those to see if they agreed. I waited for that insane volume. Again, it was strong resistance, hammer candle, drew the range once it broke. RSI, waited for the longer time frames to be extended. Just like stochastic. So a lot of confluences I used on these to win these two trades. So this is something I've been doing now where I've been waiting for, I've been on the 1 minute chart, just watching and waiting and looking for these big spikes in volume. I missed this one. I think I was asleep. But you get these big volume spikes, and especially if you get, a bearish candle like that, you would, draw the range out of the candle, knowing that big players they were making moves at those levels. Now, were they buying? Were they shorting? Well, the candle formation kind of tells you, looks like they were shorting. And then you could have obviously drew a range on there, and then it broke the range, and you would have taken the trade. You would have set the take profit, behind the range. And then as you can see, that one would have played out beautifully as well. So this is a strategy I really like because I've always been kind of enamored by volume and been, I want to know what are the big players doing, right? They move the market. I don't move the market. I am a surfer. The wave comes, I hop on and I try to ride that sucker. Like, I don't have money to move the market. Other people are moving the market with millions of dollars, maybe sometimes billions. I don't know. So how do I find out like what they're doing or when they're making moves? So this has been a kind of a cool way to see when those big players are making moves. Now, sometimes you can get a big volume spike and then it keeps going up, right? So I have to sort of, okay, are they buying? Are they shorting? And then, based on indicators and different things, try to, and kind of formations, price action, try to figure out, what are they doing, right? And of course, luckily in both these situations, I was right. They obviously some players were shorting it, got a nice retracement, and then this one people were longing it here. So just a very cool trade strategy. This is my favorite, I think, trade strategy thus far because it's on the 1 minute, which means I get to scalp, and I like to scalp because I like to be in and out. I was in and out of this trade. Look, in about 15 minutes. It's like, yes, love it. Don't like sitting in trades for a long period of time. I think eventually I will switch over. Once I have enough capital to where I don't necessarily need to day trade. I probably still will. Let's be honest. It's fun. But, at some point I do see myself getting, very busy with my YouTube channels with, those who don't know, I'm an actor. So I do acting gigs and I'm building my acting portfolio. And so, eventually I might be busy doing acting gigs, doing more YouTube stuff. I'm hoping to obviously become a very, an expert in the crypto space too, to where maybe people want me to, talk about that or, teach people how to use it and things like that, to where, I could be pretty busy. And in that case, I might try to swing trade because then, obviously I only have to check the charts like a couple hours a day and my trade, and I'm holding my positions for a long time. The signals are a lot stronger, obviously, because, The signals are just on longer time frames, tend to play out a lot better than just all the noise you got on the short ones. But as for now, I want to scalp and short-term trade while I'm on the charts, because I could literally stare at the charts all day long. I love it, guys. So those are my trades. Again, Bitcoin. So here's the trade I'm in right now. Here's why I got into this trade. There's one main reason why I got into this trade. We'll see if it works out. And it's the 200 moving average on the hourly, because this thing has been powerful, right? We broke underneath it. We came down. We created that first bear flag, ranged for a while. We got rejected pretty hard. Now we were able to bust above it for a second, right? And then it dumped right back down. So major rejection off the 200 on the hourly. Then we came up again and got rejected again, really hard. A lot of volume, big candles, boom, right? So now we're kind of getting squeezed by the hourly, and we did have a nice rejection off of the hourly and broke back into this pattern. So my thought is, it's almost going to create somewhat of a head and shoulders. You get a shoulder, a head, a shoulder that rejects off of this trend line, then breaks down. And at that point, that either forms maybe a double bottom here, or a W pattern with a double bottom that either comes down all the way or stops a little bit short before breaking it to the upside and then coming back up for maybe a retest here. If, because obviously the 200 is starting to even out a little bit more, which is a bullish sign. Obviously, it's been pretty dramatically straight. So this is the first time it's actually started to bend a little bit. So that could be bad news for my trade potentially, because we don't have that same dramatic angle on the 200 moving average. So went ahead and got in this trade, figured I'd have multiple, have this range resistance. I have the 200. I've got this trend line here. So I've got some, again, not a lot of volume too on this upswing overall. It's kind of a weak upswing here. So that tells me that there's not a lot of buyers here, because it's just the volume is declining and kind of got weak. So a lot of big sellers right here, and then a weak rally by the buyers. So that could mean more downward. But that is it. That is where we're keeping an eye on this wedge pattern here. And we are just looking for, again, I'm looking for a breakdown and then come back up, retest, and then we'll continue on in our nice little triangle. So guys, that is my thoughts for Bitcoin. Another thing, of course, we're keeping an eye on, though, is the DXY. Got the 4-hour chart here on the Heikin Ashi. And as you can see, we still look very strong, very, no wick bottoms here on the Heikin Ashi. We are in this rising wedge pattern here, which I think maybe I even could draw it like that as well. Yeah, we're in this rising wedge pattern, which does have a bearish breakdown. But as we know, the Fed is continuing to basically kill risk assets with kind of what they're doing, raising interest rates and such. So although, yes, we are getting up to a strong resistance level here, so we could see some retracement on the DXY, which would help Bitcoin have kind of a bullish move. But we still have some room left to go up a little bit higher, a little bit more room to touch the top of this wedge here before either breaking up out of it or getting rejected back down, having a small retracement. And then obviously we'll see if it does break out bearishly, maybe what the price target for that would be. Let's try to find out real quick while I've got you here. This is the highest point. We could do something like this, which means, could retrace all the way, 618 would be perfect at that. If it broke down, got support at the 618, would coincide with that trend line and the 21 moving average before seeing, a higher move up. So that's definitely at play. Something like that would be not surprising at all. Why is it trying? Oh, that's the old one, the 16. Okay, well, yeah. So I don't see any reason why the DXY wouldn't just retrace and continue upward, because the Fed is basically manipulating the market to do exactly that, So I don't, I don't foresee that changing anytime soon. Inflation's out of freaking control, so they're going to continue to try to rein that in as much as they can before they turn the printers back on. Guys, that is it for this video. As always, make sure to save your money, grow your money, buy some Bitcoin, because we all know that fiat currency is the ultimate meme coin. It has an unlimited supply. It's worse than Doge. It's worse than Sheeb. So make sure you're using this time to accumulate risk assets, because you are buying them at a huge discount. Now, again, it's not financial advice. I'm not a financial advisor. Do your own research. This is for entertainment purposes only. But as far as what I'm doing, I am accumulating Bitcoin. I'm accumulating Ethereum. I have for the last 2 months. And I'm also accumulating a few altcoins like ADA. And I have a lot of DeFi farms that are farming things like Sand and Polygon. I've got farms going for XRP, for BNB. I've got farms going for Ethereum and Bitcoin. I've got farms going for... I actually have an AVAX farm, AVAX and Bitcoin farm that I was like, yeah, I'll get some exposure to AVAX and Bitcoin too. So a few different farms like that. I am farming those tokens, staking as well. I have a lot of different tokens. I'm not gonna lie, I can't even really keep track. I try to keep track of them, but I have a lot. So guys, thank you for joining, and I'll see you on the next one. And now we stop the video.